Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 15th, 2025, and we're diving into Navan's third quarter fiscal year 2026 earnings report. Navan, a leader in business travel, payments, and expense management, has just released its financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, welcome to the show.
Thank you for having me. It's great to be here to discuss Navan's performance in their debut quarter as a public company.
Revenue and profitability overview. Let's start with the top line. Navan reported a total revenue of $195 million for the third quarter, marking a 29% increase year over year. John, can you elaborate on the factors driving this growth?
Absolutely. Navan's impressive revenue growth is primarily driven by its strong performance in the enterprise market and its AI-first platform, which is resonating well with customers. The company also achieved a non-GAAP gross profit of $144 million with a 74% gross margin and a non-GAAP operating margin of 13%, showcasing effective execution and cost management.
That's quite an achievement. How did this translate into net income?
Navan reported a non-GAAP net income of $9 million, a significant turnaround from a non-GAAP net loss of $14 million in the same quarter last year. This reflects their strategic focus on operational efficiencies and margin expansion.
Operational efficiencies and future outlook. Despite the positive non-GAAP results, Navan reported a GAAP loss from operations of $79 million. Can you explain this discrepancy, John?
The GAAP loss is largely due to stock-based compensation and amortization of intangible assets, which are excluded from non-GAAP calculations. On a non-GAAP basis, Navan achieved an income from operations of $25 million, highlighting their operational strength. Additionally, the company is undergoing a CFO transition, with Amy Butte set to depart in January 2026.
Looking ahead, what does Navan's guidance for the next quarter and fiscal year indicate?
For Q4, Navan expects revenue between $161 and $163 million, representing a 23% year-over-year growth at the midpoint. For the full fiscal year 2026, they anticipate revenue in the range of $685 to $687 million, with a non-GAAP operating margin of 3% at the midpoint. This guidance reflects continued confidence in their business model and market demand.
Strategic initiatives and market position. Navan has been making strategic moves in the market. Can you tell us more about their recent initiatives?
Navan is capitalizing on its enterprise momentum, having closed significant deals, including one of the largest in Europe with a KC40 company. A Forrester study highlighted a 376% ROI for customers using Navan. They've also upgraded their AI capabilities with the AVA model, enhancing customer interactions and strengthened their NDC leadership with partnerships with Emirates and Qantas.
These initiatives seem to position Navan strongly in the market. How do they impact their competitive edge?
These strategic initiatives enhance Navan's competitive edge by improving customer satisfaction and operational efficiency. Their AI-driven platform and strong partnerships in the travel industry position them well to capture more market share and drive future growth.
Key takeaways. As we wrap up, Navan's third quarter results highlight strong revenue growth and a positive non-GAAP net income. With strategic initiatives and a solid market position, they are poised for continued success. John, any final thoughts on Navan's investment prospects?
Navan's robust performance and strategic focus make it an attractive investment opportunity. Their ability to drive growth while managing costs effectively is commendable. However, investors should keep an eye on the CFO transition and market dynamics.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Navan's performance in the comments below.